Thank you very much. Thank you very much to TOKEN2049 for arranging this conference. Great venue at the hotel here. And thanks for my co-panelists for joining us. And it's our hope today to give you an introduction into different approaches to decentralized exchange. In the space where most of the trading is dominated by centralized exchanges, which require trust and a central party to organize trades and the back end, security, trade confirmation, and all the aspects of a full trade cycle, we now have the ability to move some of those parts of the trading stack off of a centralized exchange and onto a decentralized exchange. Each of the projects here today have a slightly different approach to what decentralization means. Some are completely trustless, some are non-custodial, but I'd like to say that we're now having routine days where decentralized exchange is doing multi-million dollars of the trading volume. So today we'll explore 5 different approaches, and what I'd like to do now is introduce the co-panelists just down the row and allow them each to just introduce themselves, what their project is, and then we'll come back and give them each an opportunity to discuss their project in a little bit more detail. And I always find that the best part of these conferences is the ability to ask and answer questions at the end. So we do have some of the staff with microphones at the end. If you have a question, just raise your hand and someone will get a microphone to you. So let me introduce Louis to you, and you each just go down the line, introduce yourselves and your project.
So good morning, everyone. My name is Loy. I'm a CEO and co-founder of Kyber Network. So what we do is we build a fully on-chain decentralized exchange. So we run entirely on the blockchain, on the Ethereum blockchain. Our exchange is powered by smart contract. So there are several reasons for us to build a fully on-chain decentralized exchange. So first of all, our security is protected by the Ethereum blockchain, and so as long as the Ethereum blockchain is secure, then our chain is secure. The second reason is that we want to provide the fully integration with other on-chain entities, because we realize that one of the users of decentralized chain is all the on-chain entities, like all the smart contracts and all the decentralized applications, and they also have the need to convert and exchange other tokens. So that's why we want to run everything on the smart contract. So other application they can just easily integrate with Kyber network. So we just launched our public beta yesterday. You can just go to kyber.network and see how easy it is to trade with Kyber.
And Maxim for Waves.
Yeah, hi guys. My name is Max. I'm responsible for global operations strategy at Waves. A little bit what we're doing, like Waves, it's just not about decentralized exchange, it's just complete blockchain ecosystem. And like main idea is just mass adoption to be in the market right here, right now. And the main idea is just they can issue tokens like with 3 clicks. It's very easy, and straight away the token is tradable on our decentralized exchange. Our DEX, we have like own approach. We're trying to combine like the best of 2 worlds. So like speed of decentralization, they're like matching mechanism and centralize. But like value transferring can take place on a blockchain, and it's verified by consensus algorithms. We think, of course, it's like semi-decentralized system. We think like now it's just the best way to be very fast on market. And we are working, trying to get, as we're trying to be on the market right here, right now, we need to work with fiat currency. In this way, we're working with some gateways. It's usually a trusted one, and which really provide us liquidity from the fiat currency.
Great.
Yeah, thank you very much.
AirSwap.
Yeah, so hello? I don't think this is on. Hi, my name is Michael Oved. I'm with the AirSwap team. So I started my career in the financial services industry, I think like a lot of people in this room. I was a high-frequency trader, and I started on the FX desk. And I think one of the things I experienced very early on is counterparty risk. So we, at Virtu Financial, we used to clear our trades through AIG, and this was in 2008. And AIG was our prime broker, right? So AIG basically allowed us to access the financial market. Without AIG, we couldn't access the financial market. And then when Lehman Brothers went bankrupt, likewise, AIG went bankrupt. And so I firsthand got to experience what counterparty risk was. And I think that a lot of the people here on the stage are basically really trying to remove these centralized components from the ecosystem, because there is this systemic risk that you introduce by having these centralized components. AirSwap itself is modeled after the FX markets. We are taking a strict peer-to-peer approach, which doesn't have an order book, and it follows the OTC markets.
And Balazs, introduce to us Herdius.
Hi everyone, so I'm Balazs from Berlin-based Herdius, and pretty much our approach to decentralized exchanges is when I pretty much looked at how can we create a different kind of DEX, was to solve everything on a private key level. So essentially what we do is something we call the distributed virtual wallet network, meaning that we interconnect all the blockchains on the private key level through this wallet system. And obviously the main use case of it is decentralized exchange. So that's pretty much the best way to explain it, because if you interconnect everything on the block or the private key level, you automatically interconnect all the chains, and you don't have to worry about if they use smart contracts or how you implement it inside your network.
Great. And the project that I represent today is called Paradex.io. Paradex is built on top of the 0x protocol. It's meant to look and feel very much like a centralized exchange, except that it's non-custodial. So users trade in a very familiar fashion, but the assets of each customer remain in their own control up until the moment that a trade is transacted. And when it settles on the blockchain, the funds or assets are transacted instantly using the public blockchain for security and verification. So 5 different approaches to decentralized exchange. Each has a different tech stack. Paradex, for example, is built on a protocol called 0x. The other projects are built on proprietary tech stacks to different extents. But importantly, each of them uses a different approach to transacting orders, to price discovery, and to liquidity. So what I'd like to do next is give each of the panelists an opportunity to explain a little bit more about their approach to decentralization, and we're going to start with Kyber.
Right. At Kyber Network, our model is a little bit different. We are totally different from the traditional centralized changes. So what we do is we remove the order book entirely. So that means user won't see like all the buy and sell orders. So what they will see is the best price on the what is the buy price for some token and what is the sell price for some token. And these prices are offered by all the market makers, or what we call as reserve in our platform. So we bring all the reserve on chain. They will have a lot of coins and tokens that are ready to be traded with the users. So when the user talk to Kyber Network, we will talk to all the market makers and get the prices, return to the users. If the users are happy, they will just send a transaction to do the trade. So this approach make it really easy for the user to trade, because for most of the non-technical user or mainstream users, they won't understand the order book. And secondly, we also address the liquidity problem in decentralized changes. So if you look at a few other decentralized changes, probably because of the poor adoption, there's not much liquidity over there.
And so your target use case customer is what type of trader?
Right. We target the mainstream and non-technical users, and we also target all the on-chain entities, all the decentralized application, all the derivative exchange, fund management platform running entirely on-chain, because we can guarantee liquidity. Right. Every time you want to trade with us, we can talk to some other reserve or market makers to provide the liquidity and execute the trade for you. So with that, the integration with other platforms makes it really easy.
So you focused on user experience and ease of understanding how to interact.
Exactly.
Okay. All right, the next project is AirSwap.
Sure. So we're taking a fully integrated approach to our tech. So we basically have an approach that is going to appeal, we believe, to market makers and to retail traders. So the fully integrated approach basically takes everything from beginning to end, including our regulatory strategy. So we have the ability for market makers to write to our APIs and serve orders to retail customers. And this we believe will be very similar to how the foreign exchange markets work. It's kind of something we talked about earlier.
And why the foreign exchange market as opposed to stocks or other types of execution models?
So the FX markets are the most decentralized classic asset class in the world. It generally trades peer-to-peer, and we think it's a good model to approach for crypto assets, which are global assets.
And do you have launch dates in mind yet, or beta dates that you can share with us at this time?
Yeah, so we are in our beta with market makers actually serving orders. So it's very exciting for us. It's something we worked very hard to get to this point, and we will launch within the next couple of months. I don't want to set a date yet, but within the next couple of months, and these will be the first 24 tokens that we support in our liquidity partner network.
24 tokens to start.
Correct.
Great. All right, the next project to introduce in a little bit more detail is Herdius.
Yeah, so pretty much as I previously mentioned, we are a blockchain agnostic decentralized exchange due to the fact that we solve everything on a private key level. So it doesn't matter if something is using graphs or it's a regular blockchain, let's call it. And you can say it forward in the future that every new blockchain technology, be it superior or inferior to what we have today, is still going to use public key cryptography to some essence. And that's why we have this distributed wallet network, which slices up the key of each user into different parts and spreads it across the network to different nodes, so that this key only has to be reassembled when transactions leave our chain. And the good thing about this is you can solve trading inside your wallet at the same time. So from the user experience perspective, it's not something like Ether Delta with really complicated processes or horrendous user experience. It's rather that you press trade in your wallet and you get your funds inside your wallet straight away. And that's pretty much our approach to a DEX.
But Balazs, how does price discovery occur on Herdius?
Yeah, so this goes back to the previous question of decentralization. And price discovery, pretty much we have an on-chain order book. And even with Herdius, I try to position myself to be a neutral player because we do not make any fees from our markets. So it might be the case that everyone from this table will work together with so that we create, or my vision is that we create this global order book or trade pool and actually create also an intra-DEX settlement system because that's, I think, a big misconception in this space, and will be welcome to your opinions, but to work together with centralized exchanges works to some extent, but at the end of the day, there's, I think, a list on GitHub with 200 DEXs, and none of us are really working on a solution to work together and create a global liquidity pool, but yes, we have an on-chain order book.
Got it, okay. Let's talk about Wave's platform.
In fact, we just, as I told, we just launched maybe 1 year ago. We were one of the first, I guess, decentralized exchange. We're just now this on the first stage now. And according to Liquidity, we just, as we build up the complete ecosystem, in this case, we just have, we would like to support all the tokens, good tokens which we launch on our Decentralized exchange. We have our liquidity fund.
You'll help us learn what a good token is when we start to have some discussion.
Yeah, yeah. So and we have our liquidity fund. It's just like entity which can contact market making with the projects, and so in this case the guys which can support second market. In this case, we are as we can. I just again mention. I told already about trading on fiat in our platform. That's now we are working with gateways. It's a very important part because it's like our partners from the world, for example, Digital Lira, it's like Turkish gateways. They're good guys. Well, in fact, they provide us some liquidity of fiat currency in this case. And in our platform, you can trade fiat currency against token which you issues, currency against fiat and everything, so something like that, yeah.
How does the fiat currency kind of get close to the aspect of decentralized?
You know, we need to speak about a little bit about gateways, how it works. Usually, we have like several approach. First of all, how you can integrate fiat currency onto blockchain. First of all, you can work with some kind of gateways, which like have incoming fiat as a way of blockchain tokens. And the second one is kind of you can have like market pack. Which just creates stable coins tied to real world currency. So we support first approach for the first time, but we're just thinking about stable coin on our platform for the future. Yeah.
And stable coins are starting to be more prevalent. They're being used now in different approaches as well. Some are faith-based and some are actually backed by reserve. Yeah. Interesting. So Paradex is our project. As I mentioned, it's built on top of the 0x protocol. The 0x protocol is basically an open protocol with very highly tested tools for exchange, focused on the trade matching and submission to the public blockchain for verification. Some of the benefits that we get from using 0x is that we are able to replicate a real order book with order matching. Cancellations are free and fast. That's very important to attract professional market makers who need to have some situational awareness about their risk without having to wait for block time to expire to know whether or not they transacted with a trade. And for very important reasons about trust and fairness, we prevent front running by using the matching model for 0x, and it respects price time priority, which is a trading tenet for hundreds of years. Coming soon for Paradex would be mobile and localizations for different countries, territories, and even content sets. You can see from the screenshot, it's a very traditional looking exchange. So a couple of aspects that I think each of us have different approaches to. Perhaps the most important is to talk about liquidity. How do you solve that chicken versus the egg problem? You need to get liquidity to get more users. You need more users to get liquidity. So take it away.
So liquidity is our main concern when we design Kyber network. So that's why we have we just remove the order book entirely, and in our model we onboard like all the market makers or what we call as reserve in our platform to bring them on chain and provide the liquidity in the first place. So even if there's no users, right, we still have full liquidity over there, ready to execute the trade.
Is that an automated algorithm that provides liquidity?
Exactly. So what we do is we talk to like all the people who have idle asset, right? Because if they just keep their coins and tokens, one coin today is still like one coin tomorrow. But what we can do with us is they can be a liquidity provider or reserve in our platform, and they can earn profit from all the trading spread in our platform. So we talk to a lot of people who have substantial amount of coins, and we even like talk to the coin issuer to ask them to introduce their own reserve on our platform.
And they contribute to the reserve, which provides the liquidity for the interactions that may come when there's not a lot of other participants.
Well, I mean, so that is, after we address the liquidity, the thing is, if there is no user, right, there is hardly any cost for the liquidity providers. So they do not lose anything, right? So our next task is to bring a lot of users on chain, to our platform. So that's why we needed to work with a lot of like wallets, providers, platforms, so that they can integrate with our exchange, which is extremely easy because we run everything on chain. So they just needed to send a transaction to our smart contract to execute the trade.
And how does that kind of differentiate, or maybe it's a little bit similar to AirSwap in terms of liquidity when you show up to trade?
Yeah, so I used to be a market maker, and I think I designed AirSwap with market makers in mind, and also have had very good conversations with market makers. We currently have 3, probably getting to 4 or 5 pretty soon, early market makers on board. I think that by removing the order book entirely, you basically allow market makers to have reward without as much risk. Because when you're publishing your order to a public location, you have risk. And
The risk meaning that they've stuck their neck out by providing a price that others can hit.
correct. So aggressive liquidity providers, the second that's off value, they will come and try to hit your order, and then it's a race as to who can cancel or place the order faster on the matching engine. And so by removing the order book entirely, I think that we have basically allowed market makers to succeed in our platform, and actually have had no concerns about liquidity just yet.
Got it. And Waves is a different approach, and of course Herdius is different than all of these approaches, but what is the order book approach, and why do you favor that as opposed to the no order book approach?
Yeah, as I told that, according to liquidity, we just started working at normally in this case, and we have this liquidity fund which is connect all the market makers to one place, and this is like our next step. We just really collect all the guys together and provide this right rules just to succeed in this market, and just connect tokens, our token issuer with liquidity in this case. Of course, it's difficult now, and it's really is a big question, especially with closed blockchain ecosystem as Waves. But now what we can do is we have like it's like very connected with developing stuff, because we just now. We just launched our smart contracts, and we have like opportunities to make atomic swaps for ERC20 tokens to be traded in our decentralized exchange. In this case, I can think that really can help us just to be like build up this liquidity in this case. Yeah.
Got it. And Herdius, talk about liquidity on the exchange in the sense that you're focused on private key for security, but the point is to be able to decentrally exchange.
Yeah, so my vision for Herdius as well is to create this network or a hub of users that when a new user wants to enter the space and they're looking for a wallet to store their funds at for a desktop or mobile, they're going to use a wallet that's compatible with the Herdius network. And compatibility with our Herdius network, all it means is that a current wallet provider has to implement our distributed key generation system. So it's a very minimal effort for them to do so. And once you have that in place, you kind of have a hub of many users who can obviously trade straight from their wallets. So that's my vision, as well as I already mentioned this intradex settlement system or global order book. But something else we're trying to do is kind of subsidize centralized exchanges coming on board our system and match orders with our network. Because since we use this virtual wallet network once again, if a centralized exchange uses it for their hot wallets, then they can seamlessly match transactions and do orders, create orders with our order book, just like any user would. And for those transactions, we would subsidize it so that we take a fee cut as a network, rather than the centralized exchange taking a fee cut.
And the incentive for the centralized exchanges to interact that way is what?
Yeah, so it's the same aspect of having the private key. So one thing we're working on, and that's for our first beta at the end of the year, is to implement Ethereum and Bitcoin, so any kind of Ethereum asset. And we would create a special bridge so that the smart contract that everyone uses as their base could be linked up with our sidechain, so that if a user buys AirSwap tokens, for example, they just send their tokens to that address and they can use the AirSwap infrastructure just like any other Ethereum user would.
Agnostic to each individual approach at this time.
Yeah, so in a sense, we are not building our own DEX. We are just creating the infrastructure that powers everything. And if you or AirSwap or Kyber has a better infrastructure or user interface that users would prefer, I'm all for it if the transactions are routed through our network and we help everyone in the system scale or provide an easier user experience.
Great. Just a few more minutes, and I wanted to save some time for questions, but can we talk a little bit about how we are each approaching regulation and some of the processes that we think about in terms of which tokens are good tokens that we talked about? Mike?
Yeah, so at Virtu we got airdropped into Asia at one point, and there was 5 of us, and we had to figure out how to expand not only our business model but also regulatory-wise into Australia, Singapore, Hong Kong, Japan, Thailand, China. You get the point. So at 24 years old, I basically became an honorary lawyer. There are generally 3 things I would say that regulators care about. They care about the things they care about the most about. It's about execution, it's about settlement, and it's about custody. And if you think about decentralized exchanges, blockchain-based exchanges, they essentially collapse the first 2. So execution and settlement become one transaction, and so that vastly simplifies the amount of work you have to do. And also, there's no custody. So I think from a decentralized trading perspective, I think we're all going to be in good light as long as we do the work and communicate to the regulators and actually teach them, because this is new technology. They don't understand it. They might be, a little bit scared of new technology, but I think it's up to us to really go out and have conversations with the regulators.
Is the non-custodial aspect enough?
I think, well, if you think about it, the regulators, a lot of the times, they just don't want headlines, right? Like what happened in Japan with CoinCheck, that was just a massive headline, and it was kind of embarrassing for the Japanese government because they went in, they came in, and they made crypto trading legal, right? And then 6 months later, or less than a year later, they had a massive hack. And so I think all the other regulators are looking at them and trying to avoid these type of headlines. And so if you remove the custody situation, you remove those big hacks, the big opportunity for headlines, I think regulators are going to like that very much.
Got it. And Lloyd, the tokens that you have for your beta, how did you arrive at that selection?
So, I mean, we are still in beta mode, right? So that's why we just select, for now we are working with like 15 tokens that we determine based on their volume on other changes. Because we wanted to, get some good volume so that we can incentivize more market makers to join our platform. But later on, we just welcome all the tokens that are not security. If the token issuer can also be one of the reserve in our platform, then we just welcome all of them.
Yep. And Paradex has a similar approach. We are a US-based exchange. The standard in the US for tokens to not be considered securities is the Howey test. So the limited offering on Paradex now are things that are not likely to be considered securities. That's really all the time we have, except for a few minutes for questions. So if there's any questions, could you raise your hand and we'll find a microphone? All right, great. So this is an opportunity to get a little bit back on schedule. Thanks very much for all of the panelists for Decentralized Exchange. Really appreciate your participation and the different approaches. Thank you.
Thank you, Ron.
Thank you.
Thank you very much.